This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. But this is not going to be your normal video because it's not a trade review. It's not a daily review. Today, I'm going to be covering my risk management plan for the eval that I am attempting. After 3 months of trading in a paper account, I finally feel that I'm confident enough to go ahead and attempt an eval with the model that I've curated. So let's get into it. Everything that I've created so far with this model, I'm putting onto a Miro board so I can just have it laid out visually and know exactly how I am supposed to operate this model. So if we pull up the board, put myself in the bottom right corner so I'm not in the way. And if we look at this, you can see that there's a lot of information and I'm extremely analytical. So if I'm developing a model, I have to know everything about it because I want to know everything about it. I like taking complex things and making them simple. So I'm figuring out everything that I possibly can about it, and I'm refining it down into the simplest form where it's just straight bullet points. If this, then that. If that, then this. And that's it. So you can see that I have a lot of different points here about the model, and they're kind of all unorganized right now because I'm in the process of just collecting this information, processing it, and then putting it to a systemized format, kind of like something like this, where it's kind of just like a top-down, step-by-step approach that I can just read and follow easily. So today, though, we're going to be covering risk management on the eval. In order for me to come up with the risk management plan, I had to go back and know my numbers. So what I did was I went to TradeZella. I went to my trade log, trades, and I selected everything, bulk action, and I exported everything as a CSV, and I ran it through ChatGPT, and I sat side by side with artificial intelligence, and I came up with a risk management plan that I think makes sense based on all the data. So if you look at my net cumulative P&L right now, you can see that I'm basically a break-even trader, but I am just consistently getting better. As long as I continue to do the same things day in and day out and follow my processes, I get better by default, and that's the beautiful thing about it, right? If you come to the market, or if you come to every single day and you know exactly what moves the needle and you just know that all you have to do is do that and put one foot in front of the other and know that eventually you're going to get there, you curate this belief in yourself that is just unbreakable. And you know that without a shadow of doubt, you are going to make it happen. So that's where I'm at right now. I'm break even, but I know that I'm about to hit that threshold where boom, I break out, and then eventually I'll start consistently profiting. That's the goal. There's a lot of things, there's a lot of constraints though that hold me back. Not a lot, quite a few, but there's a number one constraint that holds me back. If you've been watching my videos, you know what that is. It's going to be market approach, and we'll talk about that. But for now, let's talk about the risk management plan. So like I said, I ran through all my data through artificial intelligence and came up with trade stats. So I wanted to know just basic trade stats like my win rate, average losing trade, biggest winner, biggest loser, profit factor, and expectancy. And then daily, weekly, and some additional stats as well. So let's break these down real quick. My win rate right now is 25.5%. Now, I believe that's only going to get up with the changes that I'm going to make with this risk management plan because I'm implementing partials and I'm trying to combat one of the mistakes that are holding me back the most, which is I'm so worried about being right more than actually making money. Every time that I get into a trade, I'm aiming for the full swing of over 100 handles instead of just taking off at a low-hanging threshold objective. I can secure so many more winning trades and just compile small wins consistently. And some of you guys have mentioned this in comments, and you're absolutely correct. This is definitely something I should be focused on in the beginning, right? If all I'm trying to do is feed myself, then I don't need to be going for full swings and 100 handles. I can do that, let's say, a year from now, 2 years from now, when I absolutely master this model and I get so good with it that I can confidently walk down 100 handle swings almost, I'm not going to say every single day, but almost every time my model is presented. Let's put it that way. But right now, what I should be focused on is just walking down small moves, 40 to 60 handles in the NASDAQ, and I can consistently profit and feed myself because that's all I want. That's all I want to do. I just need some consistent income from trading. That's it. So I believe that I can boost this win rate up to maybe like 30 to 40%. Once I implement this partial profit taking system and I dial back the risk to reward ratio on these trades and stop aiming for the full swing and stop worrying about being right, and just focus on actually feeding myself, then that's going to help a lot. And that's a big part of this risk management protocol that I've established here, is I'm going to be implementing partials. So my average winning trade, you can see, is $985 or almost 50 points. And this includes data from back in June. And back in June, I was still kind of operating without a model. So I had trades that were 30 handles, around 30 handles in June that kind of dragged this number down. But if I do catch a good move, my model is present. I know that from my data and from the data that I've collected through back testing. If I pull this up real quick, this is my weight training process. Let's go to, here we go. So if you look at the full R on this trade, right? Look at the return. Look at the return that my model just consistently offers. Let's put a filter on this so we can get rid of all of the entries that are empty. Or let's just remove these in its entirety. Remove this. Filter, higher time frame narrative is not empty. Okay, that would be it. Okay. And then these should not be there anywhere. So I have 61 recorded examples. And let's scroll to the column where I can see. Why don't we just get an average of, why don't we just do it right now? What is the average return? Let's just calculate that real quick. This is the beauty of Notion. You can run these numbers real quick, just like this. So let's get the average. And the average return is 193 handles. Oh, okay. This probably skews that number right here, 1,078. It's probably 107.8. Okay, so let's say the average is 170 handles that my model yields at the very most. This is like best case scenario. I'm recording best case scenario. Best case scenario, when I say full R, I mean the best case scenario. So let's average this out as well. You get an average of this, about 9R. Okay, I don't need that right now. All I need to do is feed myself, and that is what I'm trying to. That's the point that I'm trying to drive home with myself. That's all I have to be worried about. Okay, I'm not out here trying to catch these huge ass swings. So my average winning trade is going to be around 50 handles. My average losing trade is going to be around 15.5 handles. My biggest winner that I've taken is 128 handles, quite large, right? If I get a couple of these and I'm executing one E-mini, then I'm basically passing the eval. I'm doing a 50K account on Top Step. I'm basically passing the eval in one trade. But that's not necessarily the goal. I'm going to use a bit of an aggressive risk approach, but I'm not going to be trading one NQ and just trying to knock the whole damn eval out in one trade, 3 trades. That's not how I'm going to approach this. My biggest losing trade, now this, matter of fact, this trade right here should have been a winning trade, but what did I do? I self-sabotage. One of the second biggest reason that I'm holding myself back right now is the reason why this was my biggest losing trade over the last 3 months. This should have been a winning trade where I should have secured 80 handles, but I let it come back on me and turn into a losing trade. So just eliminating mistakes like this, and I know if I eliminate the main constraints of my trading, then that's going to open up the door for profitability. So that's the goal. I'm identifying the constraints, I'm implementing a risk management plan, I'll be working on these things. So my interpretation for my trade stats is I'm a low win, high payoff trader. This can pass evals fast if I hit a few wins, but streaks of small losses can grind the trailing drawdown stop limit. You know how on Top Step, or I don't know if this is the same for other prop firms, but if you profit, the max drawdown limit of $2,000 trails your profit. So say I'm up $5,100 on the account, then what does that trail to? $4,900 or $49,000. So my profit factor and expectancy are thin, so loss limits and engagement rules are definitely necessary. So I find myself getting into large periods of drawdown because I'm a low win, high payoff trader. There's going to be a lot of periods where I'm just taking consistent losses, either it's because of error on my end, or maybe I thought the market was going to do something. I came to the market with a bullish bias and it just did not play out. That can happen. So there's going to be periods of drawdown, so I have to implement engagement rules and loss limits that are strict. So my daily performance, my best day was $2,200 or 110 points. My worst day was $885. This is trading one E-mini. My worst day, I lost 44.25 points. And this is that same day where I shouldn't even have been red on the day. That trade should have been a winning trade. Big mistakes like this where I'm just self-sabotaging. My average daily P&L is $31 or 1.5 points, so it's right around break even. My median daily P&L is 13.75 points. The standard deviation, this basically shows the volatility of I'm sure you're familiar with what standard deviation is, right? How far the data deviates from the mean point. And here it's 40 points. Let's just look at the definition of standard deviation right now, because I can't explain it. That was a terrible explanation. Standard deviation is a statistical measure of data dispersion that quantifies the amount of variation. The amount of variation, basically. So this is what standard deviation is going to measure, the amount of variation in my data. So you can see that the variation is 40 points, which is quite a bit. So the interpretation is daily volatility is high, so a strict daily stop is essential. The distribution is skewed. I have a few big green days and many small/medium red days. This is the same. This goes with the same with right here, right? Low win, high payoff trader, many small to medium red days. So my weekly performance, my best week was $2,300 or 119 points. My worst week was 82.75 points. This is the same week where I let this trade, the biggest loss that I had over the last 3 months, which shouldn't have been a losing trade, that also happened on my worst week of trading ever. So my average weekly P&L is only 4 points, right around break even, and my median weekly P&L is around 5 points, still around break even. The standard deviation for that is 54 points. So again, swings in weekly performance on huge, so weekly max drawdown limits are non-negotiable. And then some additional stats also help me figure out what I need to do in terms of risk management. Max consecutive losing trades, 8. That is a lot. That is a lot, right? So my drawdown is going to have to be managed 100%. And if I can't do that, then this eval is going to be blown 100%. The max consecutive red days that I had was 5. So drawdown periods can add up fast for me, 100%. Long periods of drawdown followed by one big win, which is basically how I'm trading at this point in time, which is why I need to implement strict drawdown rules and strict engagement rules. So drawdown analysis, my average MAE is 5.95 points. So my maximum MAE is 19.5 points. Medium MAE is 3.25 points. The 75th percentile of that is going to be around 10 points. The 90th percentile of that is going to be 12.5 points. So this is basically just measuring the average drawdown that I'm taking on my winning trades. This is my drawdown analysis, so I can get an idea of how much I should be risking per trade. So the typical heat on a winning trade is going to be 6 points. 90% of winners stayed within 12.5 points of heat, and the most heat on a win was 19.5 points. Okay, so for my winning trades, 90% of those winning trades stayed within a drawdown, meaning I incurred a drawdown of 12.5 points on 90% of those winning trades before it turned into a winning trade. So basically, I just come up with an overall conclusion from this data, and here it is. When I win big. I should be prepped to capitalize on A+ setups when they show up. Partials and runners are 100% necessary, because like I said in the beginning of the video, partials I feel are going to raise that win rate, drop the RR, raise the win rate, and minimize drawdown, because I'm self-sabotaging in the way where I'm letting these winning trades come back on me and turn into losing trades or even break even. I'm just not locking in equity. I've had a lot of opportunity where I could have locked in equity and I would be profitable this month 100%. Instead, I'm still in drawdown because I'm not locking in equity. I'm self-sabotaging. So when I lose a lot and consistently. Risk management must keep drawdown periods limited before I find the next A+ setup. I need a strict focus on loss limits and engagement rules. We already went over this. Partials, this is what I believe when I'm attempting this eval. Partials can potentially reduce the amount I lose by shifting the focus from full swing to lock in equity. That's it. Stop worrying about being right and start worrying about actually pulling out equity from the market consistently. That's it. I don't give a shit if my model offers a 100 handle swing. All I want to do is feed myself. That's it. That's the focus. That is the new focus. So the aim that I'm going for right now is risk to reward ratio down, win percentage up. The risk management shift necessary. This is it. Okay. Now here's the actual protocols that I'm going to implement from the data and the analysis that I just went through from the data. So here's something that I think was definitely going to help a lot because I'm doing the daily process that y'all have seen in my trade reviews every single day. If I go to my daily journal, let's just go through the template. Let's go through a full view. I'm gonna go back to here, not there, here, start my day. Okay, let's just go to last Wednesday. Okay, this is the process that I'm following on a day-to-day basis. This is my daily data. This is the data that I'm collecting from pre-market to intraday to post-market. And because I'm collecting this, I'm able to become really, 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 really aware of how I feel going into the market, what makes a good trading session and what makes a bad trading session. So I know exactly how I feel when I'm coming to the market, when I'm looking at the market, and I'm kind of feeling indecisive about what it could potentially do for that day, and I'm not confident in one side over the other. And I know that typically leads to a bad trading day. Well, I'm not going to go in with full size on that day, am I? It just doesn't make sense. So that's why I've kind of implemented this approach right here. I can get a read of how that day is going to be. So for me, an A-day rating is going to be one-sided, where I have complete confidence in one idea. This is a day where I have high focus, high energy, and I feel low stress. I can feel this as well when I come to the market. I'm very self-aware of how I feel in terms of focus and energy and stress as well, which is why I've been prioritizing sleep lately, because now I'm getting probably 7 hours of sleep, and I'm just waking up naturally when the sun comes up at around 6:30 in the morning, and I'm going to bed at 10. I feel good. When trading is the first thing that I do at the beginning of my day, I feel good. Now, before, I talked about this in previous videos, I would literally wake up at 4 in the morning and try to get 2.5 hours of work in before the market even opens. So I'm coming to the market burnt out. Either I would work for 2.5 hours, maybe 3 hours, or I would have a really intense workout, because the way that I train in the gym is extremely intense. So either way, I'm coming to the market burnt the fuck out before the market even opens. What sense does that make? So I've made the switch. I'm prioritizing sleep. I'm prioritizing managing stress. And now I'm coming to the market completely fresh. And I'm not the same trader at all. Night and day fucking difference. Let me tell you, this is something that can change your trading instantly, like this. If you prioritize it, if you stop trying so hard, I'm basically doing more by doing less, because yeah, maybe I'm not putting in as many hours of work towards my trading, but because I'm prioritizing sleep and I'm getting well rested, it's improving my trading performance. So I'm doing more by doing less, and that's the paradox with trading. We don't get rewarded for the more work that we put in when we're actually trading, right? Because 99% of trading is doing nothing. You're just sitting there waiting for your model to present itself. So how are you going to work harder at this thing if this thing is just sitting there and doing nothing? You can't. That's the paradox of trading. You don't get rewarded for the work that you put in. You get rewarded for things like this, where you're managing your stress, where you're managing your sleep, things like that, right? That's the paradox of trading. So I can identify an A day that is going to be extremely high probability for me when the market is one-sided, when I have complete confidence in one idea, meaning I'm looking at the market, I'm doing my technical analysis, and I think this day is going higher. That's it. I don't see any reason why we should go lower today at all. That's an A+ day. And at the same time, I have high focus, high energy, and low stress. So on this day, this is where I can dynamically increase my contract size, and I can trade only one mini. I can only trade one mini on clearly one-sided days that I'm extremely confident in. I'll give you an example of an extremely one-sided day. If we go to Friday, I feel confident in framing a bullish market approach today. I'm not seeing any reasons to go lower, but a lot to go higher. So this should be a high probability trading day. So here's the A+ day, right? So I am only looking for longs. This is an A+ day. This is a day where I can go in and trade. I can go ahead and trade one mini. And if we look at the 15-minute chart, look at this. We have clear market retraction in the overnight session that takes previous day low and comes back inside the range. There's no reason for this to go lower. All this up here is smooth. We know there's buy side above there. We have a nested new day opening gap. This shit's going higher, right? This is the kind of day where I'm coming to the market and I'm thinking, okay, I can size up a bit because I'm extremely confident in what the market should do. Now I just have to time the reversal. That's it. And then a B day rating is going to be primarily one-sided, where I'm confident in one idea, but maybe I could kind of see it going the other way. It's not going to be so one-sided as an A day. So in this case, I'm going to have high to moderate focus, high to moderate energy, and low to moderate stress. So this is going to be my default position sizing. I'm going to be trading 5 micros. That's it. That's the default position sizing right here. It's going to be 5 micros on days that I feel slight indecision or lack of confidence in one idea. I'm going to take off 3/5 of the position at a low-hanging fruit objective, and I'm going to leave 2 runners on confident in the market delivering the full swing. I forgot to mention this for the last one, but if I'm only trading one mini, then I must take off at the low-hanging fruit objective for 40 to 60 handles, nothing more than that. Because aiming for the full swing is just making things so much harder than it has to be if I'm not taking partials. When I'm trading one contract and I'm aiming for a 100 handle swing, it's not going to deliver exactly how I want it to do. You know, it could trade 80 handles in my favor, then come all the way back to my entry point and then go back in my favor again. That's what it did on Tuesday. And that's why I wasn't able to lock in more equity this week than I should have. It literally did that exact thing. And because I locked in no equity on that trade, what did I do? I self-sabotaged and I spoiled another solid setup where I could have made 60 handles. Self-sabotage. So my C day rating is a days that it can go either way. I'm extremely indecisive about the direction of the daily bias. I have low focus, low energy, and I'm feeling highly stressed. So in this case, I'm going to size down to 3 micros. It's going to be on days I feel completely indecisive and don't have confidence in one idea over the other. I'm going to take 2/3 of my position off at the low hanging fruit objective, meaning I'm just trying to lock in equity for 40, 50, 60 handles. That's it. And I'll leave one runner on for the full swing. So on these days, I'm definitely going to be sizing down. And I'll give you an example of a C day, which was, let's see, let's go back. Let's see. I'm going to see these trades that I took because I have the trades, the losses that I have taken on indecisive days tagged as indecisive, okay? So compare my approach from Friday that I showed you that I said was an A day to a day like this where I say I'm indecisive, okay? Look at all the different ideas that I'm mentioning right here. Like I have no idea I'm not confident in one idea over the other, am I? No, not at all. So I'm in the way right here. Let me move myself out of the way. There we go. Let me adjust the camera a bit. Hold on. Bear with me. The lighting is going down here. Okay, you know, that should be good. We're good. Okay. So let's go back to Friday real quick. And I didn't take any trades that day, so the daily journal. Let's do this. Go to Friday. Okay. I'm only looking for longs. I feel confident in framing a bullish market approach today. Not seeing any reason to go lower. Okay. Compare this. This is an A day. Compare this to a C day. Let's go to, what was it? The Wednesday the 13th, I'm pretty sure. Low week is clearly in. Extension. So here I'm stating one idea, right? The low week is clearly in, confirmed by yesterday's price action. Today's an extension of that, setting up sell side pre-market overnight that could form premium gap opening at the same time. At the same time. This means that, yeah, I see this idea could play out, but at the same time, I also think this idea could play out. At the same time, with all-time high condition, this could be another large update. Today presents nothing on the economic calendar, so it's not likely to do much and be a smaller range day, especially after yesterday. So, and you can see right here that I have 2 different ideas that I'm looking for, and how does that affect my decision-making intraday? Well, let's go to the losing trade. And let's see, approach market with 2 ideas, which led to this buy instead of getting onside with price. There you go. This is a C day. So now I'm able to differentiate the quality of trading days that I'm having based on how I feel in my market approach, based on how I feel in terms of focus, based on how I feel in terms of energy and stress. And that's going to determine my risk size on the eval for that day. Makes sense? It's pretty logical, I think. And then some rules. My engagement protocol. Max 2 attempts per idea. If I have one idea, if I'm coming into the market and I'm bullish, that means I can only take 2 trades. I can only execute on that idea twice. That's it. I'm not trading at all after 11. I don't do anything good after 11. I'm just going to be focused on the first hour and a half of market open. That's it. If I have no trades taken after 11 o'clock, I'm done. I'm done. I have to come to the market with one idea, always, because all my worst trading days happen when I come to the market looking to be a buyer and a seller at the same time. I'm not confident in one idea. I'm looking at 2 ideas, and that leads to all my bad trading days. I must trade in the direction of my one idea. Risk management protocol. The max drawdown on the trade is going to be 16 handles. Because if we look at my drawdown analysis, we can see that I only had one trade where the drawdown on it was 19.5 points. 90% of winners stay within 12.5 points of heat. Okay. So with that statistic, my max drawdown is going to be around 16 points per trade. And I made this exception because this was that one setup that yielded me the biggest winning trade, right? Which was $2,500 or 128 points. And that was the trade that I actually incurred the most drawdown on. 19.5 points because it was a retracement type setup where I just set my limit order out there and found a way to get on side, and the market came back, retraced, tagged where I thought it would reject, and then continued in that direction. And then I'm gonna have a max daily drawdown of $350, which is gonna be 35 points with 5 micros or 17.5 points with 1 micro. So basically, if I'm trading 1 micro, I basically only have 1 shot, and that's it. Because if I take 2 losses and I'm trading, or not a micro, I'm sorry. If I'm trading a mini and I take 2 losses, that's gonna dig me into a deep ass hole. And I have a max weekly drawdown of $1,000. If I go over, I can't go over that. And I'm only going to size up to 1 mini if I built a cushion of $600 in profit, and I've identified an A+ day. That's it. And if I stop out on 1 mini, then I'm going to immediately reduce my risk to 5 on the following trade. And then a partial profit taking system. If I'm trading 1 mini, the trade must come off at a low hanging fruit objective. I'm not aiming for the full swing at all. If I'm trading 5 micros, I must take off 3/5 of the position at the low hanging fruit objective and 2/5 at the full swing. I'm trading 3 micros, taking off 2/3 at the low hanging fruit objective and 1/3 at the full swing, which is basically just mentioned here. So that's going to be it. That's going to cover all the risk management that I'm attempting for the eval. Let me know what you think about it. Let me know if it sounds logical. Let me know if you think it makes sense. Let me know if you think I can actually pull this off. But before I end this video, I want to go over the constraints that I've been making, or the constraints in my trading where I just consistently self-sabotage myself. The number one thing that is holding me back is going to be market approach. This is the basis for all my good trading days, and this is the basis for all my bad trading days. If I'm indecisive for my market approach, if I frame 2 ideas, if I'm not confident in one idea over the other, it's going to be a bad session. If I come to the market and it's so one-sided and I'm confident in one idea and that's it, and I'm just looking for that, it's going to be a good session. It's that simple. So a lack of conviction and confidence is going to ruin that session. A split approach is going to ruin that session. Indecision is going to ruin that session. And getting my market approach wrong is going to ruin that session. But I am going to get it wrong invariably. There's going to be times I get it wrong. That's fine. The second thing that holds me back the most is going for the full swing, which is what I explained in this video, where I'm more worried about being right than making money. I'm obsessing over high R trades, and I'm trying to catch 100 handles in the market when I haven't even consistently fed myself yet. That's all I have to do. That's that. I have a strong tendency to execute early into the open, which is what sabotaged myself on Thursday. This is influenced by the best setups that I've taken. The best setups that I've taken come in the first 10 minutes of market open, but only when a specific market criteria is present. And then the fourth thing is my inability to get on side with moves, which is not really a problem anymore. I've kind of eliminated this one. And then the fifth one is going to be trading days that I should not be trading, which for this one as well, I eliminated for the most part. So for the most part, it's just going to be these 2 right here. And I'm going to combat this using the partial profit taking system. And I'm going to combat this by coming to the market only looking for one idea and basically separating the days, or yeah, it's basically just separating the days between, you know, is this going to be an A+ day, a B+ day, or a C day? And depending on that, it's going to determine if I want to trade on that, if I think it's worth engaging at all, and I'm going to risk manage accordingly. So that's it for this one. See ya.